Hello, my name is Brad.howard, and we're going to talk about VA loans here and provide some information for you and for your clients. So let's go over product benefits first. VA offers 100% financing. It can be combined with Kentucky Housing, which offers down payment assistance uh, to help put money towards either closing cost or down payment. Now, the VA loans are only good for active military and veterans only. Some of the rules with VAs, there is no limit on seller concessions. Now, I put an asterisk there because if you Google VA seller concession limits, you're going to see 4%. And that's true partly. So let's dive a little deeper into this real quick. With VA loans, seller concessions do not include payment of the buyer's closing costs or payment of points as appropriate to the market. So to give you an example, if the market today says rates are 7.5% with paying 2 points, and what I mean by paying 2 points is paying 2% of the loan amount in just additional fees. So if the market dictates the rate is 7.5% with 2 points, the seller's payment of closing costs does not include concessions of that 2 points. So if the seller's paying concessions, those 2 points are not included as part of the concessions and that 4%. Now, if the buyer agrees to do 7.5 or agrees to do 5 points to get a lower rate, so they want to pay more to get a lower rate, then that's where that 4% would come into play because that's above the market and what the market states is an average rate. So, go through it again. If the market states that today average rates are 7.5% paying 2 points, then that 4% doesn't get included in that concession of 2 points. However, if the buyer agrees to pay more points than what the market states is an average, then that's when that 4% would come into play. Also, the seller technically can pay the buyer's debts in order to qualify as well. So, that part is then getting into that 4% limit. So, seller concessions on VA loans are a little tricky. If you're ever in doubt, give me a call lender. But in general, seller concessions do not include the buyer's closing cost or payments of points appropriate to the market. So, I know that kind of maybe sounds confusing. Like I said, call me if you have any questions. Happy to explain that further. With a VA loan, only spouses or other active military or veterans can be cosigners on a VA loan. If you have a veteran that is dating somebody or engaged to somebody, that person cannot be a cosigner on a VA loan. They do not allow it. And with VA rules, the appraisals are stricter. You have a stricter appraisal guidelines, and we'll kind of go through some of those repairs that come up on VA appraisals. So, before we get into that, let's talk Tidewater. Now, Tidewater didn't really come up too much until the 2020 and 2021 era. And the Tidewater Initiative, or just Tidewater for short, is used when the appraised value of a home falls below what the contract price is and what the buyer and seller agreed on. So to give you an example, the purchase price on the contract says $200,000 for a property. When the appraiser is trying to calculate value, they're only coming up maybe with $180,000 for the value of the house. So that's below what the contract price states. If this happens, the parties involved have 2 days to provide relevant information on comps on why they think the home is worth $200,000 of the agreed upon value. The reason they give 2 days is because they expect that the agents have already done their homework on comps and already have a list of comps prepared to support that value. So parties involved have 2 days from when Tidewater is initiated to provide those comps, and those comps would then go to the lender to get to the VA appraiser. Keep in mind that the comps must be homes that have sold and not ones that are currently pending on the market. You cannot use anything that is pending because those values may change by the time closing hits. So, Tidewater again is only when the appraised value is coming up short from the contract value. Your lender will be the one to get notified that Tidewater has been initiated, and then it will be up to them to contact you in a timely manner to say, hey, we've got appraisal issues with the value. We need some comps to support the value that is on the purchase price or on the contract. So it is the only loan that has this Tidewater initiative. And like I said, it comes into play very seldomly, but in case it does, be prepared and know what it means. So now let's talk about common internal repairs, stuff that shows up on the appraisal. Chipped or peeling paint, most common one. If you have a home that has any kind of chipped or peeling paint, it will need to be kind of sanded and repainted with a neutral color or a color that matches the current wall. No exposed electrical wires, missing boxes, covers, etc. If you have any electrical boxes that don't have that little plastic cover over them, you'll want to have those installed because it could be a potential hazard for a child to come in there and possibly mess around with those wires and get electrocuted. They also have to have the boxes around them and just be properly coated. So if you walk into a house that you're listing or one that you're buying, just know that that's going to come up. Utilities must be present and working, so that way the appraiser can go through and test the water, HVAC, and all the appliances as well that might be included. Handrails on stairs above 3 steps. So if there are more than 3 steps, or 3 steps and above, you have to have a handrail. So if you got a split level house or a porch, something of that nature that has 3 steps or more, you will need a handrail installed on those steps. Flooring, if you have any missing or damaged flooring, it has to be replaced. All appliances included in the sale of the home have to be in working condition and present. So if you have a contract and you don't put a fridge on there, but you put all the other appliances, then the appraiser doesn't care if there is a fridge there or if it's working. But if it's included in the contract, they have to be present and they have to be working. And then finally, removing any mold or residue buildup from that might be present in the house. Now, common external repairs. You want to seal any bare wood, and that includes on the house or any outbuildings such as a shed. Same thing goes with chipped paint on any of those buildings, have to be sanded and painted. You're going to need to replace any missing gutters or downspouts, and you need to make sure you include those plastic runoffs that lay on the ground under the gutter. Water can be super damaging to a foundation, so that comes up quite often if it's either just missing completely or damaged and not sufficient to run that water away from the foundation. You need to replace any loose siding that may be on the house. Any mortar that is missing or falling out between bricks will need to be repaired or replaced. Any walkways or driveways that could be a tripping hazard need to be leveled out. Any shingles that are damaged or missing will need to be replaced. And then last but not least, this one doesn't come up that often, but if you do have a property with a swimming pool, it needs to be covered and have a fence. That's it really for a VA loan. Like I said, if you have any additional questions, do not hesitate to reach out to me. My name is Brad.howard. I am with Ruoff Mortgage here in Lexington. My phone number is on the screen along with my email, so don't hesitate to reach out with any questions about VA loans or any lending questions in general. I am happy to help. Hope you all have a great day.